Bismillah Rahman Rahim. This is the third video on financial accounting and first on accounting information system. In this video, we are going to learn about what is a accounting transaction and how do we record a business transaction in the basic accounting equation, that is assets is equal to liabilities plus stockholders equity. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So, accounting information system is a system that collects, processes, and communicates financial information to decision makers. Now most of the companies, they use obviously computerized accounting system, and we are going to talk a little more about what how do we record transactions when it comes to business. In this video, we are going to talk about accounting transactions, how we analyze them, and how what is we mean by a summary of uh, transactions, while the remaining part are going to be explained in the videos to follow. So in the here we are going to only talk about analyzing transactions and what we mean by a summary of transactions. Now, transactions are economic events, and when we say economic events, it means it has to be measurable in terms of money. If it is not measurable in terms of money, we are not going to record it. For example, a telephonic call received from the customers or the suppliers. We are receiving the call, so obviously this is not an economic event because we are not going to pay anything for that. So or it is not going to affect the assets or liabilities or stockholders equity of the company. So not all activities represent transactions, as I told you just now, receiving a telephone call or having a meeting with the employees or with the suppliers. No, such transactions are not, activities are not going to be recorded as they are not economic events. So assets, liabilities, or stockholders' equity item change as a result of economic events. So that is the main thing that you see, that the assets or liabilities or stockholder equity is going to change because of a transaction, and that is going to be recorded. Now there is always a dual effect on the accounting equation. You already know that we have assets is equal to liabilities plus stockholder equity. So the different permutations may be like asset may be increasing, and because it is dual, at the same time the another asset may be decreasing. There may be another situation, assets increase and the liabilities increase, or assets increase and the stockholder equity increase. Remember, dual effect. Dual means two, or it may be assets decrease, liabilities also decrease, or assets decrease, stockholder equity also decrease. So there will always be a dual effect, and the equation must be balanced once the transaction has been recorded in the accounting equation. If it is not balanced, there is a mistake. So let us see how the accountant may be selecting a transaction to be recorded or not. So we have three different events. The first one is purchase of computer or the payment of rent. And in both cases, this is a economic event because it is going to affect the assets, liabilities or stockholder equity. Like when we are purchasing, we have the accounting equation. So we are purchasing the computer. So assets in the form of computer is increasing and the cash is decreasing. So it is affecting the asset and we have to record that. Payment of rent means cash is going to decrease and the expense will decrease the profit and the stockholder equity. So that's why this transaction on payment of rent will also be recorded. You can see as we have done over here. But if there is a discussion about guided trip options with potential customers, it is not going to affect assets or liabilities or stockholder equity. So we are not going to record transaction on discussion with discussing guided trip options with potential customers. Now, analyzing the transaction is the process of identifying the specific effect of economic event on the accounting equation, whether the effect is on asset or liability or stockholder equity, or it is a combination of these three different components of accounting equation. But having said that, two things has to be always kept in mind, that there is a dual effect. So it is not affecting one time, it is going to affect two times. Number one, dual means two, and once the transaction has been recorded, it has to be balanced. If it is not equal, then there is a mistake, and we will see how what we mean by that. We are here, we have simply expanded what we mean. You know what is an asset. Anything that is owned by the company is an asset. Anything that is owed to the company is a liability. Then we have stockholder equity that has two components, common stock and retained earning. Revenue will increase retained earning, and obviously this will increase the stockholder equity. At the same time, expenses will decrease retained earning and they will also decrease the stockholder equity. Dividends will also decrease retained earning and they will also decrease stockholders equity. So we will see how what we mean by these statements as we look into some accounting transactions. Like investment of cash by stockholders. Now on October 1, cash of 10,000 is cash of 1,000 cash of 10,000, sorry, is invested in Sierra Corporation by investors in exchange for cash for 10,000 in exchange for 10,000 of common stock. Now common stock, we have already seen that common stock is for the stock under the stockholders equity, and that is increasing. The company is receiving cash is an asset, and that is also increasing. Then note issued in exchange for cash. Now note means the company has taken a loan. So here you see they have taken a loan of 5,000. When the company take the loan, cash that is an asset is going to increase by the amount, and at the same time the liability when we borrow is going to increase by the same amount, 5,000. Then we move on to the next transaction, purchase of office equipment for cash. Now equipment is an asset, so and that is going to increase. At the same time we are paying cash is also an asset, but this time it is decreasing. We move on to the next transaction, receipt of cash in advance from customers. Now we are receiving the money in advance from the customer. We have not provided the services or the goods to the customer. So as long as we don't provide the service or the goods to the customer, this is a liability for us and this is not a revenue. And since we have not provided the service, our liability is increasing. We are receiving cash and cash is increasing by the same amount. Then services provided for cash, and when the company is providing services for cash, so cash is an asset and that is increasing by 10,000. At the same time, they have provided services. Services is a revenue, and revenue is increasing in this case. So that is plus 10,000. Then payment of rent. Now rent, we are paying rent, that is cash. Cash is decreasing in this case because we are paying the expense. Expense is with the stockholder equity, and since this is an expense, it has to be minus by the same amount. We move on to the next transaction, purchase of insurance policy for cash. Now we are purchasing insurance policy, that is, we are making the payment in advance for the whole year. And because we are paying in advance, this is becomes an asset called prepaid. We are paying, if the company pay in advance, then this is an asset as prepaid, and if the company receive in advance, then it is going to be a liability unearned. So company may be receiving in advance, or they may be paying in advance. If they are paying in advance, receiving in advance, this is a liability. If they are paying in advance, this is a asset. And because they have paid cash now, so cash is decreasing by the same amount. Then the purchase of supplies on account. When we say on account, it means not for cash. So company, they can purchase for cash, or they can purchase on account. When we say on account, it means not for cash. And if it is not for cash, then this is a liability by the name accounts payable. So you can see that they are purchasing supplies. Supplies is an asset, and that is increasing by 2,500. And they are purchasing on account. On account means not for cash, and this is a liability, accounts payable, and this is increasing because our liability is increasing because we are not paying. We have to pay this amount. Then hiring of new employees on October 9. Syra hired 4 new employees to begin work on October 15. Each employee will receive a weekly salary of 500 for a 5-day work week. Uh, Payable every 2 weeks. Employee will receive their first paycheck on October 26. Now, we are not going to record this transaction, and the reason is right now the transaction has not occurred. The transaction will occur on when they begin the work, that is on October 15. So right now, since this is not a transaction that has occurred yet, we are not going to record it, and we will talk more about it in few minutes. Then we have payment of dividend. Remember, when it is dividend, dividend is with the stockholder equity, and if it is with the stockholder equity, dividend will always be with a minus sign. Expense will always be with a minus sign. Revenue will always be with a plus sign. So they are paying dividend, and when the company is paying dividend, um, then obviously dividend is minus, and since we are paying cash, so cash is an asset that is decreasing over here as well. We move on to number 11, and for number 11, payment of cash for employee salaries. If you can remember, the salary, they have hired employees, and each employee is going to receive 500 for a 5-day week, and the number of employees are four new employees. So 4 times 500, that is going to be 2,000. Now since they are paying uh, the, uh, they are going to be payable every 2 weeks. They are going to pay every 2 weeks. So each employee is going to receive 1500 per week, and there are four employees, that means 4000. So they are going to be paid 4000. Expense is always a minus and cash is going to decrease. Now why we are putting a minus for expense or a dividend? Because expense will decrease our profit, and decrease in profit means there is a decrease in retained earning and there is a decrease in stockholder equity. When we talk about dividend, dividend is going to decrease our retained earning, and when retained earning are going to decrease, it means stockholder is also going to decrease. But if it is a revenue, revenue is going to increase the profit, and this will also increase the retained earning, and so also the stockholder equity. So revenue will increase retained earning and stockholder equity, and expenses and dividend will decrease the profit, or the expense and dividend will decrease the retained earning and also the stockholder equity. Now you can see that once we have recorded all these transactions and we have made the total, this is the total for cash, supplies, prepaid expense and equipment, and if you sum up these four, the total will be 23,300. Our liabilities, the total is 5,000, 2,512, and these are for the common stock, revenue, expenses, and the dividend. So now if you sum up the liabilities and the stockholder equity, you can see that the two totals are equal. If they are not equal, there is a mistake in recording the transaction. So this completes our discussion on analyzing accounting transactions, and this is the, as I say, this is the first video on accounting information system. We will be discussing journalizing inshallah in the next video, and I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.